Welcome back to Investing Talk Podcast. Today we're doing something a bit different, tackling a listener request for a closer look at Keysight Technologies. We've gathered quite a stack of sources, earnings reports, analyst takes, even data on global defense spending. Our goal here is really to, pull out the key details, see how they connect, and understand what's genuinely driving things for Keysight at the moment.
Mm-hmm. And it's interesting, isn't it, how a company focused on essentially test and measurement tools for engineers ends up touching on these huge global trends, tech, defense, semiconductors. We'll dig into their latest numbers first, I think, and then maybe zoom out a bit to see that wider context.
Okay, sounds like a plan. Let's unpack this then, starting with those recent Q2 results. So looking at their second quarter for fiscal 2025, which just ended April 30th, Keysight put up some pretty strong numbers. Revenue landed at $1.31 billion. That actually beat the analyst estimates of $1.28 billion.
Right, and that's a solid 7% increase compared to last year. Not bad at all.
Then earnings look good too. Non-GAAP EPS came in at $1.70, which was ahead of the $1.65 forecast.
GAAP EPS, also strong, $1.49 versus $1.35 estimated, and quite a leap from the $1.62 they posted a year ago. That kind of earnings beat usually gives a company confidence. Did they adjust their outlook?
They did. Keysight actually raised its full-year revenue growth expectations. They're aiming for the midpoint of their long-term 5 to 7% range now.
Okay, so signaling some confidence there, even with, the broader economic picture being a bit uncertain.
So where did most of that Q2 strength come from? Any particular area?
Well, their Communication Solutions Group, or CSG, was definitely a standout. Revenue for that part of the business was up 9% year over year, hitting $913 million. And the source material mentioned this growth was pretty well balanced between commercial communications and the aerospace, defense, and government side.
Balanced growth there is interesting, especially when you think about some sluggishness in other tech sectors. How did their other big segment, EISG, do?
Right, the Electronic Industrial Solutions Group. It also grew, but a bit more modestly, up 5% year over year to $393 million. This was apparently helped by strength in semiconductors and general electronics, but it seems that offset some softness they saw in automotive and energy, specifically around EV battery research and development.
So that 5% growth for EISG, does that feel, reasonably good given those headwinds in auto and energy, or maybe a little lighter than hoped?
I think it reflects that mixed picture within the segment, really. You've got general electronics and core semi providing a base, but yeah, clearly some pressure points like EV batteries right now shows the volatility, doesn't it?
It does. And something else that jumped out was their free cash flow in Q2. A huge increase.
Oh, yeah.
Jumped to $457 million. That's up from just $74 million in the same quarter last year.
Wow, that's a significant jump. Really highlights their ability to convert revenue into actual cash, which is always, a positive sign.
Yeah.
Strong free cash flow like that gives a company flexibility for investment, maybe returning value to shareholders. It's a key health indicator.
Definitely. Okay, let's maybe step back for a second. Keysight's core business, providing design and test solutions. Who are they actually selling to?
Their customer base is essentially electrical engineers, but across a really wide range of industries. You've got commercial communications, aerospace, government, defense, automotive, semiconductors, general electronics. Quite diverse. Their total revenue back in fiscal 23 was about $5.5 billion. Commercial comms was the biggest chunk at $2.4 billion. Then came aerospace, defense, and government ADG at $1.3 billion, and then the electronic and industrial markets at $1.8 billion.
You mentioned ADG, aerospace, defense, and government. That seems like a really important area, particularly with, everything going on globally. How does Keysight fit in there? They don't actually make weapons or anything like that, do they?
No, that's right. The sources are quite explicit. They don't manufacture or sell weapons. Their role is providing the test and measurement tools for the electronics used in those sectors. Think secure communications, satellite gear, government research into things like electromagnetic spectrum operations, cybersecurity, even cutting-edge stuff like quantum computing.
So they supply the gear to design and verify the complex electronics inside defense and government systems.
Precisely. And this is where it gets quite interesting strategically. The sources talk about this distinction between tailor-made products and dual-use products within that ADG segment. This dual-use approach seems pretty fundamental to how Keysight operates.
Dual use, meaning the exact same product might be bought by a defense contractor and a commercial company.
Exactly that. products bought only by defense customers. The tailor-made ones actually made up less than 5% of Keysight's total revenue last fiscal year. The vast majority of their ADG money comes from these dual-use products. They basically leverage their standard commercial design and test tech.
Can you give an examples how that works in practice?
Sure. A signal analyzer is a classic case. Its job is to check if a device is putting out the signal it's supposed to. Well, the same instrument could be used to test signals from a new smartphone design or from a radar system on a military jet.
Oh, okay.
So the core technology is really versatile. It lets them tap into defense budgets without being totally dependent on the sometimes lumpy defense procurement cycles.
That makes a lot of sense. Serve a wide market but still benefit from defense spending increases. And speaking of that, the sources included some data on global military spending trends. What did that show?
Yeah, the Cypri data was pretty eye-opening. Global military spending apparently jumped 6.8% in real terms in 2023, reached $443 billion. That's the highest level they've ever recorded.
Wow, $2.4 trillion. That number really puts the scale into perspective.
It certainly does. And this wasn't just one region. The increase was seen across all 5 geographical areas for the first time since 2009. It suggests a pretty broad global trend. The drivers mentioned are primarily the war in Ukraine and just generally heightened geopolitical tensions elsewhere. You saw huge spending jumps in places like Ukraine, naturally up 51%, Poland 75%, but also Germany up 9%, the UK almost 8%. And the US and China are still the top 2 spenders, both increasing their budgets too.
Okay, so even though Keysight's purely defense-specific products are a small slice, this overall surge in military budgets, especially for advanced electronic capabilities, must be a significant tailwind for their dual-use ADG products.
Absolutely. More spending on modernizing defense systems inherently means more demand for the kind of advanced test and measurement gear Keysight makes. Whether it's for comms, radar, electronic warfare, cybersecurity, their dual-use model really positions them well to capture some of that increased demand.
Right. Now, shifting gears slightly, Keysight also plays heavily in the semiconductor industry. What's the landscape look like there right now?
Well, the semiconductor industry has definitely had its ups and downs recently. The sources note that while things were challenging in 2022 and early 23, supply chain snags, high interest rates, recession worries, or recovery is expected, global semiconductor revenue is actually projected to grow by something like 16.3% in 2024.
16% growth, okay. And how does Keysight plug into that recovery?
They provide essential test equipment for designing and verifying chips and electronic systems. And while the sources mentioned those declines in areas like EV battery R&D, Keysight seems to be benefiting significantly from investments in AI chip development. Also, next-gen communication tech, especially things like advanced wireline systems, 400G, 800G, even 1.6T technologies.
So faster and faster data pipes.
Basically, yes. Exponentially faster data pipes that need really cutting-edge testing solutions. That strong performance we saw in their CSG segment, which includes commercial comms, reflects this demand.
So even with some soft spots in the industrial segment, the big push towards more complex chips for AI and faster communications infrastructure is playing right into Keysight's wheelhouse.
That seems to be the picture, yes. Their focus on testing for AI infrastructure and those advanced wireline systems is opening up major growth avenues. It helps offset weakness elsewhere. And again, that diversification across commercial and defense, using their dual-use tech, provides a certain resilience.
We also saw some mentions in the sources about what analysts think and the stock's valuation.
Right. After that strong Q2 and the raised outlook, sentiment does seem more positive, more bullish. JP Morgan, for instance, bumped up their price target, kept an overweight rating. If you average out 3 recent ratings, mention B of A, JP Morgan, Morgan Stanley, the target is around $175, $176.
But the sources also flagged that the stock trades at a pretty high valuation. What does that signal for listeners looking at the company?
That's definitely a key consideration. Keysight carries a relatively high price-to-earnings ratio. It suggests investors are, paying a premium for its growth prospects, particularly in these hot areas like AI and advanced comms testing. It means high expectations are already sort of baked into the current share price. That's something you'd need to weigh in your own analysis.
And risks were mentioned, too, beyond just valuation. Things like macroeconomic factors and integrating that planned Spirent acquisition.
Correct. Performance has been strong lately, but, broader economic uncertainty, potential rate hikes affecting customer spending, maybe lingering supply chain issues, those are still out there as potential risks. And yes, the Spirent deal, while likely a long-term growth play, could put some pressure on margins in the nearer term as they integrate it.
Okay, so pulling it all together then, what does this all mean? We've seen Keysight deliver a strong Q2, beat expectations, strength largely coming from communications in that ADG segment, showing resilience even with some headwinds in parts of the semi-market.
And if you connect that to the bigger picture, it really underscores how companies providing that sort of foundational technology, especially for things like advanced AI infrastructure testing or defense applications, can find real growth paths, even when times are a bit uncertain. That global rise in military spending is clearly a helpful tailwind for part of their business, offering stable revenue. And that dual-use strategy keeps their market access broad, acting as a kind of hedge.
It paints quite a compelling picture, doesn't it? A company navigating what's clearly a very complex tech and geopolitical environment by providing these essential, versatile tools.
Mm-hmm. And it does raise a fascinating question for the future, I think. How will this growing global reliance on advanced dual-use technologies, like we see with Keysight's model, actually shape things going forward, both commercial innovation and defense capabilities? Will those lines just keep blurring?
That's definitely something to mull over. Well, that wraps up our exploration into Keysight Technologies and the forces shaping its market today. We really hope you found this look insightful. If you did, please do subscribe, maybe leave us a like, or drop a comment with your thoughts, or even suggestions for future topics you'd like us to tackle. Thank you for joining us.